We think a surge in gold could easily carry to the mid 2000s, maybe 2700 even, just rapidly, a gusher. Actually, percent wise, that's not a big deal if you think about it. And if you go back and look at the history of gold over the last 50 years, there have been a couple bull markets that were eightfold moves. Okay. The routine, eightfold. Well, our low was 1,050. What's eightfold? Okay. $8,000. Okay. Ultimately, it wouldn't shock us that we do another, quote, routine move in gold. But the fundamentals out there, the economic, political background is, we think, historic. And we think the wave effects for gold and silver could be far more dramatic and also more chaos theory.
Michael Oliver, the founder of Momentum Structural Analysis, recently appeared on Liberty and Finance to discuss the recent price movements of silver and gold. Oliver believes that gold and silver prices have the potential to reach new heights in the near future. He points to the fact that gold has historically increased in price during inflation and geopolitical uncertainty. He also believes that the current economic and political climate is ripe for a major move in gold and silver prices. Oliver has made some bold predictions about the future prices of gold and silver. He believes that gold could reach $2,700 per ounce and silver could reach $30 per ounce in the near future. However, he also points out that the current economic and political climate is also volatile, and that this volatility could lead to more dramatic and chaotic movements in the gold and silver markets. He predicts that once certain price levels are crossed, the momentum and rapidity of the upward movement in gold and silver could intensify. Shifting the discussion to recent price movements, Oliver highlights that gold formed a triple top pattern on the price chart, with three highs around $2,050. Notably, none of these highs reached the $2,100 mark. According to Oliver's analysis, a breakout beyond this triple top would be considered valid, potentially attracting more buyers and triggering further price increases. We will now bring you clips from Michael Oliver's interview with Liberty and Finance. But wait, there's more. To stay updated with all our future uploads, make sure to hit that subscribe button and turn on post notifications. Thank you, and enjoy the video.
Gold was in a range from 2020 summer high, 2022 high, and recent highs, sort of a flat range. Silver was in a slightly downtrending channel. I'm talking price now. Silver burst through that channel earlier this year, especially by March, was very evident. The pullback is basically dancing on top of that channel. So even from a price chart perspective, this pullback is a pullback in now what is an emergent uptrend. Okay. Momentum, we measure all kinds of time scales, annual momentum, quarterly momentum, monthly, weekly, etc. What has been going on since basically March in gold and silver has been repeated selling in those markets that has really not produced much downside. In other words, if you've been short gold, let's say not at the exact top tick of the rally, but let's say around 2000, well, you're making 20, 30 bucks, and it's been several months of selling. So if you keep pointing figures, X and O charts, $50 by 3-block reversal, you've got three highs at 2050, 2050, and 2050. That's 2020 high, 2022 high, and a recent high. None of them touch 2100. Okay, so you're sitting there on this point and figure chart at a triple top. After having blown out a triple bottom in last summer and fall, falsely, we said it would be a false price chart breakout. Sure enough, it was. You had repeated lows at 1700. We went down to 1650. Now, when you have that kind of box on a point and figure chart, if you're just a point and figure guy and that's your universe, if you have a box like that and you blow out one end of it and it's a trap and you go back to the other end, it won't be a trap. It'll be a valid breakout. So when you hit 2100, there's a whole bunch of people going to say, oh, golly, I missed it. I better get in this. Okay. Our number on silver, its old high in 2020 was 30 bucks. It made a high in that March 22 rally when gold was back up to its high. Silver wasn't. Silver was up in the highest weekly close was like 2610. Again, this is March of last year. We came back up again above 26 recently and pushed and pushed and pushed. They couldn't get through there, and then they backed off into the low 23s. Right now we're in the low to mid 24s. We argue if you get back over 26 again, watch out. They're going to blow your head off. And the same with gold touching 2100. So those are numbers we'd watch if we wanted to have a larger position or if we're not positioned in those markets. You see 2100 gold, it's a breakout. It's valid. You see 26 plus silver, watch out. That's the point at which when you go through those numbers, we think those two metals will then move from an arm wrestling upside move to something more explosive.
During the interview, Michael Oliver discussed the recent slight decrease in the value of silver. He pointed out that silver had reached a low of $23 per ounce a couple of weeks ago, but had since been retested multiple times and was currently trading around $24 per ounce. Additionally, he mentioned that the stock market had been experiencing a gradual rise, although gold had experienced a slight dip in recent months. Oliver cautioned against assuming that a pause or reduction in interest rates by the Federal Reserve, FED, would automatically result in a strong market. He mentioned historical instances, such as the dot-com high in 2000 and the period preceding the 2007 bear market, where the Fed cut rates but failed to prevent market downturns. Therefore, he advised against solely relying on the Fed's actions to support the stock market. Let's get back to the interview.
I think that the pullback we've had in silver probably saw us low in the low 23s 2 weeks ago, 2 to 3 weeks ago, retested repeatedly. Right now we're trading in the 24s. I think that probably was the corrective low. For gold, we've got some numbers, basically a few dollars above today's close. Official settlements around 1955 on the June contract. You close a week out above 1956 by much, and our weekly momentum, which is a fairly short-term metric, says, okay, you're out of your corrective mode, you're back into the upside. So we think we're at hand on doing that. Stock market's a different issue. While gold has been pulling back over the last several months, not much, but the stock market has been pressing upward. Again, not much, especially if you look at the S&P. We nipped out some highs recently, last week above 4,200, got up to near 4,300. That took out some prior highs, but marginally, and we're just spinning our wheels up here. I know everybody's anticipating that if the Fed pauses, oh boy, stock market's going to party. Don't bet on it. If you take a Fed funds chart and go back through history and look at what happened up to 2000, the year 2000, the dot-com high, the Fed had been raising rates. In early 2001, they started to cut rates. Did that save the market from a bear market to the 2002 low? No. They cut rates all the way down. The market went down anyway. 2007, they'd been raising rates all the way up to the 2006, 2007 period, and rates peaked, I think it was at 5.25% Fed funds in the summer of 2007. They actually started cutting rates while the market was still at its highs. That's above 1,500 S&P. And all the way down to the bear market low of 2009, the Fed cut rates, but it didn't save the market. So those who are hopeful that if the Fed pauses or maybe ultimately starts lowering rates, that'll help the stock market, don't bet on it. History's not on your side. And I think that's probably important for gold because asset shift will occur. Also, the other issue we brought up was the possibility, and again, this is in late 2020, that states would shift to or acknowledge the legality of gold and silver as money, legal tender. It's occurred. Alaska legislature has approved that. They've announced that the state will, people who run shops and stores can use it as legal tender. The state recognizes gold and silver as legal money. Well, in effect, that's telling the federal government's monopoly over the paper fiat currency, the dollar, that you ain't got a monopoly anymore. We're legalizing gold and silver. Texas has done the same thing. In fact, there's talk in Texas of creating their own currency that would be a crypto gold-backed currency.
Looking ahead, the future of gold and silver prices appears promising. Considering the current economic and political climate, there is an environment ripe for significant shifts in the gold and silver markets. Market observers will closely monitor price levels and breakout patterns to assess potential momentum and the direction of future price movements. As global dynamics continue to evolve, the future trajectory of gold and silver prices will undoubtedly be influenced by various factors, and investors will remain attentive to seize potential opportunities in these precious metals. What are your thoughts on the future outlook for gold and silver prices discussed in the interview? Please leave your comments and observations in the comments section below. Also, be sure to like this video, subscribe to the channel, and enable notifications to stay up to date on our latest videos on silver, gold, and copper. Thanks for watching.